Jaafar Sidik.
Hi, my name is Noor Tasneem Binti Hasran.
My name is Noor Binti Khairizam.
Hi, my name is Muhamad Shahadan bin Madzlan.
Hi, my name is Munir Bin S.Taib.
Assalamualaikum. We are going to explain the basic things that you need to know about investment in shares. In this era, saving may not be enough to ensure financial security. This is due to the fact that the idle cash in your bank account is not capable of earning more money. Therefore, an investment is always the key to some capital today. First and foremost, what are shares? Shares is when the capital of company is divided into a small equal units of a finite number, and each unit is referred to as a share. A share is a percentage of ownership in a company or a financial asset. Shareholders are investors who own stock in a company, and dividends are paid to shareholders from any profit earned by the company, and they also bear the burden of any losses that the company may potentially face. Next, how to invest in shares. There are a few basic steps for the first-time investors in Malaysia should know how to start investing.
First step is choosing a stockbroker. When they use a broker, whether a human or an online platform, they can specify which investment that they want to buy or sell and how the trade should be handled. Second step is to open a Central Depository System (CDS) account and a trading account. It offers integrated clearing, settlement and depository services to Malaysian security market investors. Thirdly, choose the number of stock you want to buy. This is because they can invest in one lot of 100 shares in each Bursa Malaysia listed company. For example, if company ABC is worth RM2 per share, they will need to purchase at least 100 shares. Fourth, monitor the stock performance. Investors may only need to check in every few months if they have long-term investment strategy. If the investor have a medium-term strategy, they should check in every night or every week.
There are several types of shares that can be used in investment, which is ordinary, preferences, growth, income, and speculative. Ordinary shareholders eligible to participate in any dividends and any distribution of assets on within half of the company. Second is preference share. Holders of preference share are entitled to having a fixed periodic income and have restricted voting right, liable to particular consumption and particular resolution. Then, growth share are different class to the ordinary share capital and will typically confer no right to dividend or voting. The share will often be restricted to participants on an exist-only basis. We also have income share, which is this share class pay out the distribution and dividend to its investor. Income share may also be known as preference share. Income share target investors seeking regular income payment. The last one is speculative share. It's a stock that a trader uses to speculate. Traders interested in speculative stock seek out securities that might seem risky at the moment, but appear to have great potential that is not yet realized. Shares also have a few features, which is priority claims, fixed rate of dividend, and non-voting. For priority claims, at the time of dividend distribution of indices or liquidation of the company, preferential shareholders have a priority right to claim on the company assets and dividend sum. However, the participating preference shareholder enjoy a fixed dividend and participate simultaneously with the equity shareholders in the extra dividends. And the last is the share do not assign voting right to their holders. However, some preference share allow its holder to vote on the extraordinary events.
The first advantage is liquidity, which means you can purchase and sell the shares at any time. Secondly is capital growth. This can be achieved when stock price increase. This is one of the long-term goals. Thirdly, dividends. Dividends is one of the advantage of investing in shares because the greater the number of units, the more return you get. And last but not least, easy to purchase, which is you can buy them from a broker, financial counselor, even through online. For the disadvantage, there are several things, which is firstly, high risk. This happens when company shares not perform well, causing the stock price to collapse. Secondly, emotional peaks and valleys, which means stock price always increase and fall regularly. The next disadvantage is shareholder are paid last, means that when a corporation is wound up, shareholders receive the last payment while bondholders and the creditors receive the first payment. The last disadvantage is high competitor from professional traders.
Are we talking about current issue in investing in shares? They are raising in monthly dividend of common stock. In comparison to the current annualized dividend of $2.964 per share, the new monthly dividend reflects on annualized dividend amount of $2.67 per share. Company make investment in people and place in order to provide consistent monthly dividends that grow over time. Because each plan that has been said will change, each company has written a forward-looking statement. Continued eligibility as a real estate investment trust, general business and economic conditions inside and beyond the country, currency fluctuations, real estate investment illiquidity, and damage from natural catastrophes are among the topics addressed in the forward-looking statement. As you know, we have been hit by COVID-19 epidemic. It has an impact on economy. The pace of reopening effort has taken a long time. This has an impact on the stock market, raising many issues such as monthly dividend raising.
The stock market has historically provided large return to investor over time, but it is also false, giving investor with the opportunity of both profits and losses, both risk and reward. There are several recommendations for investors who are new or interested in entering this field of investment. When moving into the sphere of investment, do not put all of your money in one spot. That will result in huge loss later on. Fear of losing money is one of the reasons people are cautious when investing, but a little amount of risk can be decreased by diversification, which is dividing money among several types of investments. Next, everyone should make saving money a habit because it can be the best and most profitable investment if done right from the outset. Saving money is undoubtedly joyful because it helps to our financial stability in the future. Saving also strengthens the level of passion in us that indirectly help us in this field of investment. Also, investment can be complicated and risky activity if we are not careful. So before we begin invest our money in this field, we should consult with an investment professional and become educated. This is to avoid incurring large losses to a lack of understanding in this subject. As a conclusion, although there are numerous benefits to investing in shares, investor must be cautious when making investment decision. Understand the fundamental of the investment and conducting thorough research before investing is recommended and to reduce risks and enhance gains. However, remember that failure exists in everything that humans do. We should not focus solely on profit in this venture. This is due to the fact that the percentage of investment that fail is rather concerning. In order to avoid disappointment in the future, we must invest in the smartest and safest method possible. Choosing the right investment is never easy, but it has a significant impact on the go or no-go decision. So, make sure you have extensive knowledge of investing and dare to accept any failure of success before embarking on your desire to start investing.